Welcome to the weekly market recap with SC Securities. Let's have a look at some of the latest development in the Sri Lankan economy and financial markets. Sri Lanka has successfully concluded its sovereign bond restructuring by issuing 8 new treasury bonds, each valued at 19,466.1 million rupees, amounting 155.73 billion rupees to total. These bonds have maturities extending up to 19 years and feature variable coupon rates linked to central bank standard lending facility rate plus 50 basis points. Despite the central bank discontinuing SLFR as a key policy rate, it will continue publishing the rates for coupon calculations. Local bond holders, mainly banks, accepted 30% of their defaulted bond values in rupee-denominated bonds, with an overwhelming 98% participation rate in the consent solicitation. The remaining 70% of the defaulted bonds were offered as dollars bonds with a 10% haircut, ensuring flexibility for local and foreign bond holders. Foreign bond holders were allowed to participate in the rupee option up to specified ceiling. The new bonds will be amortized semi-annually beginning in 2036 and concluding in 2043. This restructuring initiative successfully addressed $12.55 billion in sovereign bonds, converting them into a mix of macro-linked, governance-linked, and interest bonds, signaling progress in Sri Lanka's financial recovery. The Sri Lankan government has announced its goal to attract 3 million tourists and generate over $5 billion in revenue by 2025, supported by major reforms in the tourism sector. The proposed restructuring includes establishing the National Tourism Commission as a governing body and creating a tourism policy formulation council to guide development. These initiatives aim to enhance policy implementation through the Sri Lankan Tourism Authority. The government is committed to building a sustainable and inclusive tourism industry by focusing on infrastructure development, advertising, and human resource enhancement. SLTA Chairman Buddhika Hewawasam emphasized that reforms will facilitate growth, particularly through increased employment in the tourism sector, targeted at 15 to 16% of the workforce. Minister Vijitha Herath highlighted the interconnectedness of the tourism with other industries and pledged strategic support to ensure resilience. These measures align with the government's vision of a sustainable, prosperous tourism sector that boosts economic activity and investor confidence. Sri Lanka's banking sector showed significant improvement, with non-performing loans falling to 12.4% of loans in Q3 2024, down from 13.6% a year earlier, and absolute non-performing loans decreasing to 1,400 billion rupees. Provisions for non-performing loans rose to 735.8 billion rupees, reflecting prudent risk management. Loan growth of 6.9% and investment growth of 17.8% indicate recovery momentum, supported by improved capital adequacy driven by shareholders' contribution and profitability. Banks reported 178.4 billion rupees in profits by Q3 2024, up from 144.3 billion rupees the previous year, paying 105 billion rupees in corporate taxes. Declining interest rate achieved through deflationary policies and restored confidence in government securities have reduced prepayment burdens and stabilized the market. By avoiding broad-based domestic debt restructuring, the government preserved bank system stability, enabling capital deployment for economic recovery. However, state banks with exposure to state enterprise may still require taxpayer support. Falling rates and improving profit highlights strengthening resilience in Sri Lanka's banking sector, fostering a positive outlook for investors. Sri Lanka's total exports for November 2024 reached $1,269.33 million, showing a marginal 0.04% year-on-year increase as per Sri Lankan customs data. Merchandise exports declined by 5.6% to $943.1 million due to reduced earnings from rubber-based products, electrical components, and seafood. However, apparel and textile exports grew slightly by 0.54%, supported by stronger demand from the US 1.4% and the UK 4.6%. 2.2%. Tea exports also saw a 4.72% rise, driven by growth in tea packets 14.14% and bulk tea 5.02%. A coconut-based product reported a 13.08% increase, with achieved carbon exports surging by 18.62%. Services exports climbed 20.89% to $326.23 million, led by ICT exports up 38.04% to $141.39 million and logistics services up 21.09% to $162.34 million. While merchandise exports faced challenges, the strong performance in services and select sectors like apparel and tea reflect resilience and diversification in Sri Lanka's export portfolio, presenting optimistic signal for economic and equity markets. Excise Commissioner General Uday Kumara Perera has requested the Island Revenue Department to submit a detailed report on excise permit holders' tax compliance for 2025. Approximately 2,000 permits are due for renewal next year, with 1,636 applications and tax clearance reports already submitted. The process mandates tax clearance as a prerequisite for permit renewals, ensuring only compliant entities can operate. The Commissioner General emphasized the importance of a comprehensive taxpayer list for efficient processing and to block defaulters from obtaining renewals. This system reflects a broader government focus on strengthening tax compliance and operational transparency, which can enhance revenue collection and investor confidence in regulatory frameworks. With the recent Treasury-bill auction, 91-day T-bill rate stands at 8.62%, down by 4 bps. The 182-day T-bill rate stands at 8.77%, down by 4 bps, and the 1-year T-bill rate stands at 8.96%, showing down by 6 bps compared to the previous week. Let's take a look at this week's Colombo Stock Exchange market status. Thank you for watching, and we'll be back next week.